Okay, welcome back to part 2 here. Now, I'm going to try and stay focused here on what I'm hoping to show you is maybe some hidden benefit to an indicator you didn't realize that you had, and maybe a different way to think about the RSI. So RSI is widely considered the most used tool, technical tool, indicator, oscillator, whatever you want to call it, in all of technical analysis. Most popular, most frequently used. So we want to have an intimate knowledge of it, and we certainly want to recognize how it's used, how other traders are using it. And most traders use it the wrong way. Amazing. Well, I guess that's not amazingly. But most, put it this way, most new traders don't use it the right way. They don't understand really what it's telling them. Now, let me see if I can. I've blown it up here a little bit. Let me bring this down here so you see both the ranges here. So most traders, when they first start, oh, okay, I understand this RSI seems really popular. Everybody likes that and talks about it. So what they're taught and what they learn is, oh, okay, well, if the RSI gets under, what do I have here, 20, oh, well, that's definitely an opportunity to be a buyer. Well, so let's just go look how that worked out, right? So, oh, here I'm under 20. Well, I definitely want to buy that. Oh, I got one bar and off we go. So just out of curiosity here, you're still trading micros. So here we pop up here. Now, how far did we go down here? That's, oh, what did we get there? 64 ticks, right? So if you're in micros, maybe you sustain that. Maybe you take your stop here and you revisit this down here and say, oh, I got a little divergence. But that's not really where what I want you to focus on. And I don't think you realize you have this, okay, or that this is the right way to approach RSI. What I want you to focus on is this section here. Actually, hang on a second. I'm going to change these colors. I'll be back in a sec. Okay, got my colors set to match up. Okay, so here's what I want you to focus on. Now, I have two lines in the RSI here. I've just put a line here at 52 and at 48. Right, so often, oh, if you've seen any of my other videos here, I reference the 50 being as important, if not more important, than the whatever you're using, 80, 20, 70, 30, the overbought, oversold here. I think that's the wrong way to think of it. But nonetheless, it's commonly used here, and it's not like, oh, well, if we get under 20, well, I mean, obviously that may be an area where that's oversold, right, or just overextended. Different way to think of it. But again, that's not how you want to focus on the RSI. What we want to focus on here is I want you to look at here when the RSI gets above 52. Let me just track this for you so you can see it. Okay, so here, right here, I get. Oh, right on this bar here. Look what's happened here. I've gone from below, right, and I've gone up to 52. As I hit 52, well, in this case, I'm breaking 2 times the ATR. So what I have here, once I cross 52, I'm in a trending range. Now let's be clear. I certainly, nothing guarantees that that's going to sustain. I could go up here and then roll right over. But as it's, and in fact here you can see we consolidate here. Right, so this is the section we just looked at, right? We were talking about this. Hey, you're thinking, oh, right, wicks here, oh, that report was so strong the Fed's going to have to, oh, they're just going to keep raising. Well, right, so that might have been what was triggering you, but again, note, we don't cross below 52. So the trend literally goes down and ticks it. Right, 52, 48, very important. So we stay at 52, and now we start to come back. So there's this little pause in this trend. We go sideways. We get down here. We don't break 2 ATRs. We don't break 52 in the RSI, and then the trend continues. Right? So if you were a buyer here, and this isn't always the break here is not necessarily a buy signal, because you've look how far you've gone. Let's see here. We just do it this way. From the low here, we're coming back here. Well, we've gone 68 ticks. Now again, right? Not maybe micros, maybe okay, but full size certainly. Do you want to be buying 68 ticks from the low? Okay, in this case, it carries on. It might have worked out for you, but ideally, if you're going to make that break, what you're looking for is a little bit of a retrace here, so you're not buying with the market overextended here. So that's the ideal scenario. Market doesn't always cooperate with that, but we get the gist of it here. So as we're coming up here, and we look here. Oh shit. I got them back here. My green and my blue, but I just wanted you to focus on it. Above the 52 here. Now I come back, I tuck it. Now I get all the way up here. Note, I don't even get to 80. So I've got this nice, ripping trend here, right? Again, no pullbacks equal to, I mean, there's nothing even close to 2 ATRs. Little wiggles along the way, which we don't want to be hypersensitive to the little wiggle. Am I above 52 or not? Oh, I'm trending. Am I above, here's the devil's friend, have I had it at two times the ATR pullback? No. No reason to do anything other than just let it go. Now we get up here, and essentially what happens? We get a double top in the RSI. Now I get here. Look, where am I? Right, IB. I get another one here. Now look, I've got this increase in price here. We just looked at that, right? We know it's a measured move that goes up here, hits target, tags a 50. We've got a double top here. If this is going to continue to trend, I should be pushing up and going to challenge 80. But what happens? Oh. Right here, all of a sudden, now I've got my first pullback that's 1 ATR. Now look. Oh, what happened right there? Okay, so I've got a little bit of a wobble here. Let's do it this way here. We get a little bit of a wobble here where you're not sure. Okay, well, I broke, I came back, but I didn't get above 52. Right, maybe that's easier for you to see if I take that off there. We come up, we tag 52. Now look here. Look, 52 and 52. Look at that, how that prior support becomes the resistance in the RSI. Double top, right? You'll see patterns here. You'll see divergence, certainly. You'll see it, right? So this is interesting. That's why you want to mark these, right? 52, 48. So when we come back here, oh, are we going to go back and trend? Because here's what you're thinking then. You're thinking, oh man, is this? Are we just going to do this? Here we got a little pullback here. We broke the ATR. Oh, but now here we go. That's why you got to wait for that to get over 52. What do we hit here? Fair value gap. Oh, look over here, right? That's the opening range high. Oh, can't do it. Oh, now we're back. Now we're under. Now look, all the way, right? That's the trade you wanted. That's the one you weren't. That's the one you didn't expect, right? You're thinking, oh shit, well they've just blown off the report, right? So I guess they're just going to buy. It's risk on. Oh, maybe not. Wait, no, we're coming down. Well, of course, what would you be thinking right there? Right, this is just right. If you do this enough, you're going to be conditioned to thinking, oh, well, there's the bounce at the 50. Oh, here. Oh. Do I want this? Is there anything here underneath? Right. If you're just using these, you come. So here maybe. Oh, right, I can't even get 2 times the ATR. Look at the RSI. Am I over 52? Do I want that trade? Maybe not. Right now, how about golden zone? Oh, I get here. Where's the RSI? Do I want that trade? Well, you might talk yourself, hey, look, a little bit. We've gone over the average. Maybe I do want that. Is there anything here saying buy it right here? Now I'm just focused on the RSI. What that's telling me is that once I've broken below 48, I'm trending lower. And where the money is made with an RSI is between the 40. In this case, when we're going down, between the 48 and the 20. That's your trend range. In the same way that between 52 and 80 is your money making range on the upside. Now, all of that said, right? So you're looking at that going, well, I better pay attention to the RSI. Well, not so fast. Do you need to? Right? You don't need to. Let me show you why. Get all that off of there. Oh, what do I want here? Come here. Let's get you off. Okay, there we go. Okay, so we built that you have this already without even realizing it. And why is this valuable? Because real estate on your chart is valuable, right? So even though this would be important for you here, I'm gonna bring everything back up here. What have I got down here? Bring everything back up. Oh, we'll get to that in a minute. We bring this all back up here. So you'd be looking here, and we want to really think carefully about what we want below. And we don't want redundancy because again, screen real estate is valuable. So if I'm going to have an RSI here, and let me back up. If you're thinking about what to have underneath your chart, well, we don't want redundancy. So you might want something that's momentum based that would accommodate this kind of trending behavior, a la RSI. You would want something that was volume based. Could be any variety of volume based indicators. Could be some of ours. Devil's volume, could be the VZO that we have here, could be maybe you're using that the histogram that we were just looking at. So you're looking at the volume in these swings. I mean, you want something to give you some insight into where when volume is changing. It could be something like the cum delta, right, which is giving you short bursts of aggression, right? Who's the aggressor, and how is that aggression being reflected in the range, right, or maybe the center line, or how narrow or how wide the Bollinger Bands are relative to what's happening in the market. Look, is just the nature of Bollinger Bands: contraction, expansion, contraction, expansion, contraction, expansion. Right? Same thing. So when we come over here and we're thinking about what we're going to put into this, well, this is all of a sudden, right? If no one had ever taught you that or really explained that to you, you're like, whoa, man, I've been using the RSI all wrong. Right? Well, now let me just show you this. So here, let me pause for a second because I'm going to load it to the chart. So hang on. So all I've done here is add a 21 period McGinley. Now I use the smoothing at a 0.618. You know, call me a fib junkie, whatever you like, right? But then 21 being a fib number. So I'm just adding the McGinley, right? Which is it's in the same family of as an EMA, but what you're going to note here is a little nuance here that I think you'll appreciate. So when I put this, I'm going to just go ahead and add this to the chart. Oh, did I? I think I added it. Oh, hang on a second. Maybe I didn't. Pardon me. There it is. Okay. All right. Just took a minute to load. Okay. So let me get we loaded up here. Yeah. There we go. Okay. I've got. Let's go back and look for a second. Okay. So let's go back to. Let me take all of this down here, so we won't focus on this. Hang on. Let me get this. Oh, get my crosshairs here. Okay. Now I want you to look here. When the RSI crosses 52, look at the McGinley. Look at the color of the McGinley. Right, it goes green. Now, when it crosses below to 48, right here, look at the McGinley. Crosses to red. Look up here, right? When does it cross 48? Right here, we go red McGinley. When do we go green over here? Right, we cross the 52 here, McGinley is green. Right, in this slop here where this would, I mean, you're seeing it here now. It's always easier after the fact, guys. I am very acutely aware of that. Right, I trade this stuff every day, so I know when you're sitting here, you're thinking, well, you know, it's easy after the fact to see that that's going sideways, that we're not making any progress. But if you start combining some of these ideas, look at well, we have it on the other chart. Look at the Devil's Friend here, which is a God darn it, come off here. Which is a measure of 2 times the ATR. So it's 2 times, 2 times, 2 times, 2 times, right? We're just chopping, and then of course we're putting in this base down here. If we were going to sell off, why aren't we selling off? And if we're going to sell off, why is the RSI now above 52? Well, you might say, oh, hey, it was here. Look how quickly that was rejected. Well, look where you are, right? This is the battleground. Right, every day, that's the battleground. Oh, they're in, right? So that doesn't mean you scream into buying that. But perhaps, because the more conservative way to approach this is not to just buy, oh, we're in, we buy it. What you'd prefer is for this to get a little further and then come back and test from above. That's what you'd prefer. Well, again, right, market, and this being a perfect example, right, market doesn't give you what you prefer on a regular basis, right? So you got to deal with it. You got to make do. So either no trade, or you got to work with what the market is offering to you. Well, I can certainly see here, you know, even if I'm right here, this, right, we're not breaking the lows. And I've gone into a chop zone here, middle of the day. Wait a second. Now, if you were thinking about being a buyer, would you want to be a buyer right here, right into the IB low, given what you know is prone to happen there? No. There's not enough room, and certainly not in micros. There's not enough distance there. You know, you're going to hit natural resistance here. Not to mention, I've got yesterday's VWAP sitting right there. That's what that blue line is here. I should probably take those off. Don't extend yesterday's, right? But right, if you have our volume profile, I've got yesterday's VWAP right there. That might explain why this was resistance here, maybe, right? But look at the McGinley. Now, okay, now once I get on the other side, okay, well, this is all the entry you got here, right? This would have been, you know, again, hindsight trading. This here, now I'm pulling back to the order block. At least I've come to the order block. Do I want to be selling here? Look at the RSI. I'm trending. I'm well above 52. Do I want to be selling there? Look at the Devil's Friend. That's 2 times the ATR. I don't even dip into the order block. Oh, before I'm back the other way. Tough one. right? Now look right there. So there's the buy sell momentum. You see that speed of volume here, right? It's a proxy for delta, right? Now if you had cum delta, right, you probably see the same thing reflected there. Up we go. Here's the only little pullback that I get right here, right? That's it, right? And the VZO can't even break the -5. Right, so you don't have sellers coming in. Okay, let's dump it on the close, right? Which you might have been thinking, okay, they're going to take it up, and oh shit, they're going to dump it on the close, right? You might have been thinking that. Where's the McGinley, right? So if you're thinking that, are you thinking, oh, they're going to dump it here? Well, if they were going to dump it, they're going to need to break 2 times the ATR. They're going to need to break the McGinley, i.e. they're going to need to get below 48 in the RSI. They're going to need to break the IB low here, which will be the natural support. All of that's going to happen if this is we're going to dump like this, and we're going to have a big sell-off into the close. Shit, I mean, it's almost, here's 3 o'clock, right? It's a little after 3 o'clock. So there was time for that to happen. What's that? The IB mid is right there. You might have talked yourself into that, thinking, "Oh shit, look at this." Here's what you'd be thinking, right? So, but again, if you're not using these tools, there's the absolute low, right? So here's the IB mid. So you're in between the 50 and the golden zone. Oh, you might talk yourself into thinking, "Oh, hey, maybe I got a little." Here's the last up before we go down. So maybe I got a little order block right here. So I'm going to come into this. Oh. Do I want to sell that? Do I want to? Oh, it's heading down. But that's not a sell sign. This, just because we've curled over here, doesn't mean sell it. We're still above 52. It's still trending. Look at the VZO, right? You've got to use the tools. Hey, look at the McGinley. I've got an order block here. So for this to come down and accelerate and start to sell off, right? If it's up here, well, I've got to get through this order block. I got to get through the IB. I got to get through that fair value zone, that gap there. And, right, if you were thinking that, what else do you have to get through? Right, if this is the pivot here, I got to get through this algo, which will be sitting right there. So I'll get off of there. Right, swing, retrace between the 50 and the golden zone at the IB. Is that a sell you want? Is there enough room there? Is there anything here saying sell it other than this location relative to that pivot high to pivot low? That's the only thing here. Oh, IB mid, okay, maybe, and maybe, you know, there's lots of ways to talk yourself into trades, right? Maybe you're thinking, oh, it consolidated there last time we got here. Maybe we're gonna come back here, and this is some resistance. We just got up here, right? They're tagging, ringing the bell here. Now we're gonna come back here. We stalled here. Oh, we're gonna do it again. I mean, you're almost to 80 here. You are in a strong uptrend. Now, VZO here, which oscillates as well, right? So we get volume oscillation here, but this is not like a pure volume oscillator because we're using price and time and volume here. So as we get up here, this is extended. We don't quite make 80 here. We start to roll over here, and so we're losing some of the strength of trend. Because when we're trending hard, right, it's just well, you might have a few little wiggles here, but we're moving progressively higher. Just like when we're trending lower, below 48, there might be a few little squiggles like that is the natural ebb and flow and back and forth in the market, but we down until we get to 20. Back to the middle, right? So you start to see here, boy, that middle really is important, right? So this area here where we can't do anything, we're on the one side, we're on the other side. And so the first thing when you see that should be, oh, what time of day is it? If you're so dialed into the trading action and the swing by swing, don't forget to say, oh, why are we slowing down here? Oh, shit, well, it's 11 noon, lunch hour. Maybe that's why. Maybe that's why this is happening. Some things to think about. So in effect, with the McGinley here, which is against, I guess, my point I was trying to get to here, I do not need that because I know if the McGinley is green, the RSI is above 52. I know if the McGinley is red, the RSI is below 48. And so I have potential trend here. So when I have now I don't know that's coming. All right, that's the last thing I thought was coming. I don't know that big dump is coming, especially after this big ramp. You're thinking, oh, retrace, and we're going off to new highs. I don't know that's coming. So you've got to use the tools here and say, well, well, if it were coming, I sure would like to see, if I'm going to participate in that move, if it's going to be something like this and we're going to retrace and then we're going to go, boy, I sure want to get on the other side of the McGinley. I want to see it get green. It's not so much a reflection of where you are. It's what color is it? I.e. color reflecting where's the RSI. So I effectively, just in that McGinley, I've got an RSI on the screen. Just like effectively, right, in the same line of thinking here, I've got the histogram. I've got the 2 standard deviations via the devil's friend, right? I mean, and of course now I have it set to 2. I'll sometimes go back and forth 2, 2.5, but you'll find that 2, 2.5 is a very common swing range for the indexes. Very common. All right, so often you'll see the market will move. It'll go here. We'll go 2, 2.5 to maybe less than that here. And then if we're going to start to come down this way, maybe we're going to go 2, 2.5, right back this way, 2.5, right. So when you're in that chop zone like this, right, you start to chop. When you're trending, right, doesn't even look back. Which is why this is so valuable, because we don't know when that trend is coming. But the advantage here, and particularly again, I take you back to the advantage of micros. If you catch this move in full size, right? Let's just say you catch it down here. That's 68 ticks in full size. You're likely going to take that, right? I mean, it's hard to get 68, 70 ticks in a full size, right? It's not easy to do it, right? So if it stays right here, you're likely to close that out, saying, "Oh, nice trade I got there, right? I got 68 ticks on that." But in a micro, that's probably that maybe you take a partial here, but you just attach a runner, or you don't have to necessarily attach it to the indicator. Just use it kind of as you're moving your stop down and down and down and down, right? Do you want to take it there? I mean, that would be a reasonable spot. Often, right, it'd be the last pivot, right? You put it back, because if it's going to go back and get that pivot, it likely makes it back to. You could put it on the McGinley, right? Because you know that the trend's reversing. Now here, okay, well, if you didn't done that here, right, the ATR, the devil's friend, right, 2 times the ATR would get you a better price action here. Here, now you get a little fake here, so RSI it gets above 52 here, right? So it's not like, oh, it's green, buy it. It always has to be awareness of where you are on the board, right? I mean, because every line you've seen here, every line, right, an algo will use. Right, that's half the reason we have them on here, right? So IB mid, that's a big round number. IB low, that's the session low. The opening range high, the high of the first 30 minutes. The open, the pre-market low, mid, high. All of algos will use all of them. All of them. They're all natural resistance because an algo will be tied to them. We don't know the logic behind it. I just know if it tags it, you'll often see a reaction there. Very, very often. So if you were into this, you might be thinking, oh, why is it stopping there? Oh, could it be the IB mid? Right, I think we looked at that before. Could it be that you're at a spot the algo is going to fire? Well, you're kind of in between here, so you might have been thinking, oh, IB mid, that's what it is. Right, that's why you got to have these levels on the board, because you'll trade right into them if you don't know where they are. Okay, how did I do there? That's 22. Okay, I got one more here. We're going to dig into the VZO a little bit more so you understand what you've actually got there. Okay, I'll be back part 3, so stand by.